Trump then came out and said that he never met CZ and doesn't know who he is, of course. So he was like, yeah, some people told me to pardon this guy because he didn't do anything wrong.
Which is even worse, right? When he was asked about it yesterday, who'd you pardon him? Huh? Who? Well, I heard he was good, so I'll just do whatever. What? I'll just pardon whoever you want. Folks, you heard my lament with Cy Canterel. Cy is a fearless scholar out in the wild who follows technology, uh, the online hellscape, crypto. You have to subscribe to her awesome Substack, which is Abstract Machine.
Abstract Machines, yeah.
Track Machines, where she gives you her independent, unfiltered thoughts about all of it. And last time I had her on, people really appreciated Cy's deep dive into what is the red pill, blue pill, black pill accelerationism, what's happening online, groypers, edge posting, edgelords, what is this? And people are like, I'm terrified. Oh my God, this is the future. And this is before Cy. We had the 2,900 pages of Telegram chats between young Republicans using all this language openly, young Republican leaders in their 30s, right? So now, if you all thought, oh, Cy, she's being cray last month, well, you saw the proof in the pudding. And then Cy told me, I really want to talk about crypto. So I was waiting for the perfect time because I'm like, well, let's do a deep dive on crypto and specifically the crypto grift. And folks, for who are watching, I know there's going to be about probably 1,000, 1,500 people by the time we're done. But I know some of you don't know anything about crypto. I know some of you know a lot. So we're just going to connect the dots. Just come with us on this DeLorean. And before we start, the reason why this is important is, Cy, can you just tell people what happened yesterday, what the Trump administration did as they're unleashing ICE agents against innocent Americans and, trying to prosecute Letitia James and Comey and threatening to go after Schiff, this tough on crime administration. Can you just tell them what they did?
Yeah, so yesterday, Trump pardoned Changpeng Zhao, who is also known as CZ. The crypto world likes to have acronyms for all their dudes. And so CZ he pled guilty to money laundering and fraud. He was a founder of the company Binance, and we'll get into like what these things are and why this matters, but Binance is a lot like Coinbase in the US. And so it's a centralized platform that actually runs money through a centralized entity. And that is why Binance was actually targeted by US and international law enforcement for these types of actions, because what they were doing is they were not abiding by US or international law to KYC, know your customer. They were using things called mixers to obfuscate the origin of money. It's basically a automated money launderer. It's like a washing machine.
That's what he was serving time for, money laundering.
And he pled guilty to this, right? So this was not something that he was just found guilty for. He actually admitted guilt to this, and he was sentenced to and served 4 months in prison for these charges. And he was released and has been out, but Binance really were the ones who came to the Trump administration and pled on his behalf for him to be pardoned so that he could go back onto the board of Binance, because as part of his felony conviction, he can't sit on the board of Binance. He has not been able to do that. So they wanted him to be able to come back and be at the helm of the company again. And so Trump actually came out and made that pardon for him. There's a whole nother deal in there with World Liberty Financial, which is the Trump and Trump's sons and Witkoff's son entity that they have started, which is what we're going to track today because it's wild. But Binance is a big portion of that too. It's actually the rails that World Liberty Financial runs on. And so it's all tied up in that deal as well. Trump then came out and said that he never met CZ and doesn't know who he is, of course. So he was like, yeah, some people told me to pardon this guy because he didn't do anything wrong.
Which is even worse, right? When he was asked about it yesterday, who'd you pardon him? Huh? Who? Well, I heard he was good, so I'll just do whatever. What? I'll just pardon whoever you want. And then also last week, Ghislaine Maxwell, haven't heard that name in a long time. Who? What? Huh? So I'm going to say this as an aside, and this was my prediction. If he pardons Santos and if he pardons CZ, and he, when asked directly about pardoning Maxwell, didn't say no, Folks, he's going to pardon Ghislaine Maxwell if she has more goods and is going to drop it because he cannot escape the Epstein files. You heard it here first. That's my prediction. You think, Waj, you're crazy? Well, yesterday, Steve Bannon openly told you the plot where Donald Trump is not going to leave, and you all thought I was crazy when I said he wasn't going to leave. So I give you that. But I digress. Before we get to this, because folks, the CZ story, the pardoning of this Binance co-founder, the fact that this friggin' money launderer is now free, it's tied directly to Trump, his family, and the $5 billion they've made off of crypto. And one of the biggest scandals of the many scandals is in the past year, the Trump administration has passed the first pro crypto legislation, the Genius Act. They have deregulated crypto. And the first criminal that he pardoned in the crypto world wasn't CZ, it was Russ Ulbricht. And Russ Ulbricht is the founder of Silk Road, which is the digital hub for sex trafficking and drug trafficking. We're going to get into all of it. It's all a big grift. But before we do, Cy, there's so many people, and you know this, they're like, what the F is crypto? What's happening? So if I'm 8 years old, Cy, and you're talking, and I got this story, Cy, what's crypto?
Okay. So it is essentially a speculative vessel that at this point at least, back in the day, and by that I mean like in the early mid-aughts, there is an anonymous white paper that was released by someone calling themselves Satoshi, who this is essentially the idea for Bitcoin. And there's been this is sort of where like web libertarianism comes in and like meshes with like strange right-wing politics and then also like really far left-wing stuff. But there was always this like decentralized sort of libertarian impulse in the early web. And this is actually what Peter Thiel grew out of as well, what PayPal was originally supposed to be. It was supposed to be a vehicle for payments that could go around central banks and regulations. And so and then you get into the whole weird thing of like the original PayPal algorithm for detecting fraud is what became Palantir and what became the surveillance state. So, it's all connected, but not to sound conspiratorial. But when this original white paper came out, it was sort of this idea for the idea of a blockchain. The blockchain, what it is a decentralized ledger. And so if you have this idea of like a book with information in it, with like a spreadsheet, it's like your accounting ledger, right? With all the
Yeah.
different transactions, this money came in from this place and went out to this place, et cetera. The idea was to spread that out over a decentralized infrastructure so that if one part of that ledger became compromised or was fraudulent, that the other parts of the copies of this that are decentralized everywhere and not controlled by any one single entity would be able to prove what was real and what was not real. So it's not that blockchains themselves are necessarily bad. It's not that crypto is necessarily bad. It's just that this is something that in the way that we have decided to go about implementing this and monetizing it, it has become this Wild West, very like unregulated space where most of the use case of this up to this point has been speculation. And that's not in itself even speculation is a use case, right? It's not that speculation is bad. Like you need a certain amount of speculation in markets, but it's just been that there's no other thing that we have come up with that is a use case that works in contemporary society for blockchains and for crypto. So crypto, there's the blockchain, that's your infrastructure layer. Crypto is the custom currency of a blockchain. And because blockchains are not running on infrastructure that's paid for by a central company like Amazon Web Services, although some of that gets nutty now too, but it's not, the infrastructure is being paid for by people who are actually running nodes. So that's the idea of like a Bitcoin miner is somebody who is actually helping to maintain the network and maintain the uptime and validate those transactions as they come through. And so they are getting a reward in return for investing their own hardware, investing their own electricity and all that stuff.
So basically, so wait, so I'm going to even dumb it down more because there's 3 or 4 people who are like, I'm already confused.
I'm sorry.
And so, no, don't say so. So basically, Bitcoin is like a digital ledger. All right. So it's a digital ledger. And then I mean, this is so everyone's on the same page, folks. I know it's confusing, but we'll get there. Don't worry. So it's like, okay, Bitcoin was a digital ledger. and it was created for the goal was more transparency, decentralization, no regulation, go around the banks. This will be awesome, more freedom, more accountability, but also more transparency, and we will be more free, right? We won't be handcuffed by all these
Yeah. An even
institutions.
simpler way of explaining this is like if you and I decided like, hey, I don't want to be a part of a bank anymore. Like this is really annoying. I get charged all these fees. They're checking into what I'm doing. I don't feel like telling them. Like let's get everybody in our city together and we're going to start our own financial institution.
There you
But
go. Yeah.
in order to do that, we don't want to have one or two or three people who are making all the money like they would at a bank. So hey, I'm going to have part of all of our financial transactions. I'm going to give you part of them. I'm going to give thousands of other people in the city parts of them. And we're going to set up like a cable that goes between my house and your house and all of those other people's houses. And it's like every time one of us wants to spend money, instead of doing it through like a credit card transaction or like a bank transaction, it's going to run through this like separate network that we've set up. And like I'm going to go and like get a ping, and this is all digital infrastructure, but when I get a ping, I'm going to write that down in my little book, and then you're going to write that down in yours. And once a certain amount of people have said, yeah, this thing actually happened, then we say, all right, it's done. That's now the ledger of truth, the source of truth, right? And so that's how we're going to keep track of things. And because, let's say tomorrow I'm like, I don't want to be part of this anymore. I'm just going to walk away. Like if I leave, that still means you and all those other thousands of people can keep on doing the same thing, right? So that's the idea of a
That was
blockchain.
very helpful. I completely get it. So now they've created this infrastructure. They've relied upon themselves. They've connected the cables. The miners invest and lay down the pipe, if you will,
Right.
figuratively, folks. And then you're building this out, and you're like, okay, this is the future now. This is the future. Yay, crypto.
Mhm.
Why then? For many people listening, they're like, well, why would people even invest in this? This is so speculative. This is such an inshallah Hail Mary pass. Why not just reform the system that we already have? Side.
Because they feel like they're too far outside of it. And because, again, these people are like, they're a little bit contrarian, right? They're a little kooky. They're like, these are the people who would like, if you lived, next to somebody in 2016 who had like a Bitcoin mining operation running out of their closet, like that seemed cooler, frankly, than like going in and trying to like lobby for changes in the banking industry, right? It's like, and it's connected into all these things that a lot of tech people are really into, like gaming and stuff like that. So like again, like if we're back in our little network and I've got my little ledger and my little piping and you've got yours, what we're being recompensed for is not in dollars. We're being recompensed in Bitcoin, let's say, or whatever we decide to call it. But because we are not part of the financial system, we have to make up our own money. And that's what this is, right? That's what crypto is. It is like originally it's like you're being paid in this made up currency that based on your contributions to maintaining this network. But as we have like gone on, we have been able to hook that up to, and in crypto, this is called fiat currency. So central banking currency, like, the euro or the dollar. And that will allow us to put like to on ramp US dollars onto one of these blockchains and to off ramp US dollars off of it in exchange for crypto.
That makes okay. So crypto now can be exchanged for dollars. Dollars can now be exchanged for crypto.
Right.
And crypto was the currency that was then created in this digital infrastructure by this community that wanted to bypass the financial institutions and have deregulation. How did crypto then go from this kooky, oh, we're just a bunch of friends creating our own freaking digital infrastructure, digital
Yeah.
currency, right? To it's the name it has replaced Staples Center in LA.
Yeah. Um, So Bitcoin was the first one of these, right? This was the first proof of concept. It was the first thing to gain traction, and then other ones followed, right? Ethereum is another major one, and that was the kind of the second biggest one that launched. They all have different ways of running this infrastructure. So Bitcoin, because it's one of the oldest, its infrastructure is one of the energy intensive usage and all that stuff, in part because it's just like the way it's built is a lot older and uses a lot more resources. Newer ones use a lot less resources. And so we just get this like, oh, that's cool. I'm going to start my own thing, but I'm going to improve on it slightly so that it can be what they call a protocol layer, which is like the internet is built on top of the stuff that the Defense Department built for similar reasons, for a decentralized architecture of information that if there was a war, we could still access information and contact each other. So it's the same idea. Ethereum founder Vitalik Buterin said, hey, you can't really build applications on top of Bitcoin because of the way it's architected. I'm going to start my own protocol layer called Ethereum, which the currency for that is called Ether. And you can actually build infrastructure on top of it to build both additional protocol layers, so a blockchain on top of a blockchain. And then you also have applications that look just like a web application where you can go in and sign in with your blockchain wallet. It's called a wallet. That's your user identity. And then you can transact or, be a member of things based on your affiliation with Ethereum. So that was the big, push forward with Ethereum. And now we see so many blockchains, right? There's like the barrier to starting one of these things is so much lower than it used to be. And so that's where we see this sort of starting to spiral out and become this giant thing. And then when people start making money on it in like 2017 to like 2022, that's when we started seeing it really explode.
Well, how did people start making money off this?
Speculation. So you have, again, you have the original currency, Bitcoin, that is for the Bitcoin protocol. You have Ether, that's a new token, right? So think of each of these as kind of like its own country at this point.
Wait, someone asked what a blockchain is. Blockchain is a decentralized digital ledger that records transactions across computers in a network. I'm reading this. Instead of a single database, information is stored in blocks that are linked together in a chain, with each new block containing a cryptographic hash on the previous one, making the data secure and transparent. So as Cy said, imagine if all of us were in a community and we're like, hey, let's start our own currency and let's trust each other.
Yeah.
And
here's my ledger.
Yeah, here's my ledger, here's your ledger. We're going to just lay down the pipe and connect to each other. That's what it is. But just think digitally. It's all You're not stupid, folks. You're not stupid. This is the brave new world. I know this is a lot. For some people, they totally get it. For some people, are like, what's happening? It's all digital, and it's just the terminology. That's why I keep repeating some of this stuff. I'm with you. I'm not going to leave you out to dry, and neither is Cy.
Yeah, and it's really, I worked in this for 4 years, I would say, and there's still stuff. I mean, it changes all the time. It's really technical, so don't don't feel bad if you don't get it. It's a wild west. So yeah, people start speculating on this, and again, because literally everything in what I call hoarder capitalism is based on arbitrage opportunities. So when you start seeing this is what Sam Bankman-Fried did, right? This is how he made all his money. He looked over at Japan and he said, I can there's an opportunity there if I can get people, because Bitcoin hadn't been integrated into all of these trading exchanges yet. And so he would get people in other countries to go stand in line and do a manual trade. He would pay them some nominal amount, and he would be able to exploit the difference in price between Bitcoin at one end of a transaction and the other, which is exactly what people are doing right now in the treasuries market, by the way, which feeds into the stable coins that we're going to be talking about. Yeah. Anyway, so there's a price differential at either end of that transaction. So he scoops that off as profit. And because this was something that most people couldn't get in on and didn't want to go to the trouble of paying people to stand in line to create a manual transaction, he made a lot of money that way. And that's how he started his exchange.
He just siphoned off cents here, cents there, cents here.
It was a little more than cents, but yeah, it was tens and hundreds and sometimes thousands of dollars
off of transactions.
Yes. Yeah. Mm-hmm.
And so for many people,
buying a currency at one price and then reselling it at a higher price.
Wow. And how much money did he make?
Billions. I mean, billions of dollars. And I don't know what he was worth at his height, but I mean, so he took that money, which he made at a trading firm called Jane Street, which is focused on more algorithmic trading, that type of strategy. And he started a crypto exchange called FTX. And this is, again, something we need to when we're talking about Binance or Coinbase versus something like FTX, or there are a lot of different other ones of these, there's decentralized exchanges and then there's centralized exchanges. And centralized exchanges are things like Coinbase and Binance, and that means they're actually holding central bank currencies, fiat currency, and they're allowing people to connect their bank accounts and to put money into a blockchain and then pull money back out in a centralized currency into their bank account. That means you're subject to a lot more regulation than what Sam Bankman-Fried was doing, which is a decentralized exchange. And a decentralized exchange means that you are allowing people to send money from one crypto wallet. So they've already somehow managed to do that initial exchange, put the crypto into their wallet, then they send it into the decentralized exchange and can trade again, right? And
Gotcha.
so that's what Sam Bankman-Fried, that's what FTX was.
And can you explain then, because so many people are listening right now, they're like, this seems ripe for fraud. This is, I mean, like, it seems like all a big grift, but with like new age terms and a bunch of people who are selling you shit that, like, essentially they're just grifting you on. Speaking about the grift and how what could have been a well-intentioned, bunch of people on the internet saying, yeah, man, we're going to create our own currency, man, or we're going to have transparency, man, and it's going to be awesome. It's not going to have regulations, and it's just going to be you and me, and we're going to trust each other. How did that lead to Silk Road?
Oh God. I am not as well versed in the total history of Silk Road, but essentially, like, this is, anytime you get fully deregulated speculative markets, you get fraud. That's just what happens because
Right.
people want to go in there and they want to make a lot of money really quickly. That's arbitrage, right? You say, I see an opening in a market that nobody else is seeing right now, and I'm going to get in there and get as much on top of every transaction as I possibly can. And then I'm going to get out before everybody comes in. That's also what happens in a Ponzi scheme. And
There you
so
go.
you saw with like Bernie Madoff, right? Like he was running a huge Ponzi scheme. A lot of these crypto entities, especially during the run up in 17 to 22, were Ponzi schemes. And
That's what I mean to cut you off, side, but that's what it seemed
yeah,
like to me when all these people said, we'll talk about this, but all these people said, bro, get in this. You're going to make so much money. I didn't understand it, and I didn't have money. And I don't like investing in things I don't understand, and that seemed to me to be shady. But it like a lot of people made so much money.
so
And
much
and,
money.
and then they got out. And then once they made that much money, they lured in all these other middle class folks who then lost their money. But please continue. I didn't mean to cut you
Yes.
off.
And that's exactly what happened with Trump's meme coins, right? So we can get to that, but so all this run up through 2022 when FTX failed, that was this giant just spike in crypto activity. And that was also during the NFT boom, which is even more crazy. And
Yeah,
we'll have to
sure.
do a whole separate thing on that another time. But so you have all of these currencies, cryptocurrencies. You also have these other speculative investments that are based on their value is denominated in a cryptocurrency, which is like an NFT. So it's like saying, this piece of pottery is worth X amount of Bitcoin, right? Well, what does that mean? That's like whatever this happens to be at the time, that could be totally different, from day to day or moment to moment. And so you can start to see, well, if I buy this for, a certain amount of Bitcoin, when I buy it, it might be worth $50. When I resell it tomorrow, it could be worth $200,000. It's or nothing or less than nothing. So we started to see a lot of that during NFTs. They're like a Ponzi scheme inside of a Ponzi scheme.
Yeah,
Because
I called
again,
it inshallah money.
yeah, yeah, it's just like it was the wildest time, and I am really happy that I was there for it and inside of it because I feel like it's a really unique opportunity to be inside of a crazy hopping failure. But like that's again another story. But what happened? So we get this rise of what are called meme coins after the NFT boom is over because the NFT boom, like nobody's into that anymore. It's not making money anymore. And so you get what are called meme coins coming out around the end of that, like after FTX had collapsed. And so that is where, because it started to get a lot easier to launch individual tokens and coins are the same thing. So it got really easy to launch tokens because people were building services on top of these protocol layers, right? That you could do this without having to manually code it and know all the coding languages that you would need in order to launch a token, which used to be really prohibitive, right? And these protocol layers were being built in such a way that people could build applications on top of them, right? And so you get just this rise of tokens that have no what are called utility. And that means like you can't actually do anything with this token. You can't transact in it. You can't pay people. I mean, you can kind of, you can't really like pay people for it and swap it for dollars or euros. So it's kind of like, again, it's an asset inside of an asset. So it's like you're running this on Bitcoin, you can't really, but you're running this on Ethereum, whatever. And now I have my like can cryptocurrency on top of Ethereum. And so in order to get dollars out of my can currency, I have to switch it into Ethereum and then I have to switch it into dollars. And somebody makes money each time I do that.
It's like a
Right?
nesting doll. It's like a Ponzi
Yes.
scheme nesting doll, but like
It's a
digital.
scheme inside of, yeah, exactly. Exactly. And it's all based on this idea of like, again, getting rich quick, getting all this money fast. Like, I don't, this is the culture that we've made. So Trump's meme coins, when they get launched, that is the playbook that they're following, right? They see that these meme coins are making tons of money really fast, and so they're going to capitalize on that moment. They launch the meme coin. They and this is something that also happens very frequently where you like announce the launch, you get people really hyped for it, you give a bunch of the coins before it launches to your friends, then when it hits the exchange, the price goes way up. It's a lot like an IPO, right? The price goes way up. Then everybody who is an insider who got it for nothing dumps it. Then it crashes, right? And then
Ah,
everybody else is
ah,
left out in the cold. And
shocking.
that is exactly what happened with the Trump and Melania coins. So
And the hot tulip
everybody,
coin.
yes, and all the other ones, right? And there's another meme coin, World Liberty Financial Meme Coin, WLFI, that follows the same playbook. So
So it's just
that,
all a scam. I mean, to me, it just seems like all a scam. You have the president of the United States of the country saying, I'm going to launch a meme coin. Everyone's like, Donald Trump is the president of the United States. He's into crypto. Cool, man. The meme coin is going to be worth something. Otherwise, Donald Trump wouldn't invest in it. And then Donald Trump says, hey, I'm going to give you all my billionaire friends, let Nick and others. Here's a free meme coin. They're going to hype it up, hype it up, hype it up, hype it up, hype it up. All these guys got it for nothing or free. They've hyped it up. Now it costs like, say, $100. And then at that $100, they're going to sell it, make like, I'm just throwing arbitrary numbers. And then they're going to make a whole bunch of money. And then all these average Jose's and Janes are like, oh shit, quick money, rich, meme coin. My friends talk about it. They made money. When they go buy the meme coin is now worth nothing. All
right.
bullshit.
And so the Trump family directly netted before tax, but this is probably more, $1 billion just from those two meme coins, not even the World Liberty stuff, just Melania and Trump. Meanwhile, most people lost money, most average people. There were losses of like something like 600 million, $500 to $600 million of average people's money because the coin dropped between 90 and 98% in value right after it launched. So there you
Wow.
go.
And then also, can you tell us, because I've used the word grift and scam very deliberately. If that wasn't enough to prove to you that this is a grift and a scam, can you talk to us about how I'm old enough to remember, Cy, that President Carter had to sell his peanut farm.
Mm.
And now the Trump family has made up to $5 billion off this meme coin. And they have passed pro crypto legislation through the Genius Act and deregulated. Can you just, for in layman terms, connect how like just completely unethical all of this is? Like how they literally are profiting off of a scam.
Yeah, and this is something like the family as a whole are basically like just trying to grab whatever they can from whatever market they can. I mean, this is not limited to just crypto. But the way that they started, and this gets into like the crazy stuff with the MGX, which is the UAE's sovereign wealth fund. So once January 6th happened, the Trump family was debanked, right? So Deutsche Bank, Capital One and several other banks canceled hundreds of their accounts because they said we just don't really want to do business with y'all, like this feels really sketchy. And so Eric and Don Jr. came out like after that and were, they were so chagrined by this politicization and weaponization of the central banking, industry, that they said we're going to go start a decentralized finance organization that will make sure that we as a family can never be debanked again. And so that's the origin of World Liberty Financial. What they did with World Liberty Financial is the two Trump sons, along with Steve Witkoff, the envoy to the Middle East, and Steve Witkoff's son, Zach, who is another real estate person, decide to form World Liberty. They go and talk to MGX, which is the UAE's sovereign wealth fund. What MGX does, and I have a chart, I have a flow chart. I will tell you first, and then I'll show you the flow chart. MGX gives World Liberty Financial $2 billion. World Liberty Financial goes and buys $2 billion worth of U.S. treasuries. Then that creates the treasury that they have collateralized because the Genius Act tells stablecoin. This is where stablecoins happen. So I'll have to explain that in a second.
Genius Act is the first pro-crypto legislation, folks, that was signed by the Trump administration. If you remember, I tried my best to talk about it, but there was like 14 different fires. But I'm like, look at this, folks. It was when Donald Trump was surrounded by a whole bunch of rich white men smiling in suits and ties. That's the Genius Act, the first pro-crypto legislation signed by a president. Why do you think they signed it? But for just filling in the dots, Cy, continue.
So one of the things the Genius Act said is it said you have to collateralize your stablecoin. So a stablecoin is a cryptocurrency that is underwritten by some kind of fiat currency. So most stable coins are always going to be worth, in theory, like $1 or €1, right? And in order for it to be tied to the underlying asset, you have to have collateral that is equal the value of that stablecoin,
Got it.
right? And so these two things together, the digital thing and then the physical collateral, is called a peg, right? That's how a stablecoin maintains its value relative to the underlying asset. And so what we saw in the earlier version of these stablecoins is that sometimes the stablecoin would be underwritten by a cryptocurrency.
Wow. So it's not really stable at all.
Right. And
It's
so
the
this is what
unstable coin.
happened in like 2022 when FTX collapsed, because there's a lot of contagion and all of these things. There was a protocol layer called Terra that was in the East, and it had a stable coin that was one of the most popular at the time, but it was underwritten by its own currency. So when that currency collapsed, it depegged, right? And then suddenly this thing was not worth $1 anymore at all.
This
It
is
just
so
collapsed.
terrifying. I know this is a lot for people, but basically it's a giant scam. It's a giant scam. It's a Ponzi scam, and God said it right now in the comments. They're pegging us. And what's so interesting is, folks, it was a huge piece of news that people didn't follow, but the Witkoffs went to the Gulf states, got $2 billion, right? Also, Kushner got $1.5 billion from the Gulf states. And the Witkoffs then teamed up with the Trumps, Tweedledee and Tweedledum, and said, all right, we'll just invest this $2 billion in our bullshit friggin' crypto shit. And then just to give ourselves insurance, we'll tie our crypto shit to a stable currency.
Right. And so to rewind a little bit, so the Genius Act says you can't do that anymore. That's the one good thing about this, right? If you have a stable coin, you cannot peg that stable coin to a cryptocurrency. You have to peg it to something that is actually worth $1 if the stable coin's going to be worth $1. And it actually set out a limit for the treasuries of these stablecoin issuers, that they have to have a certain amount of liquidity, just like a bank has to have a certain amount of liquidity after the '08 crisis, especially, in order so that if there is a run, if there is like an unforeseen liquidity event, that it won't collapse. However, it doesn't mandate the type of liquidity and treasury investment that regular banks go through. So you can think of these stablecoin issuers as shadow banks, right? So they're operating in the same way, but they are not required to have the same amount of legislation.
Mm.
This is what the Trumps and the Witkoffs decide to set up. And they decide to set it up with the sovereign wealth fund of the United Arab Emirates. And so this is this is what it looks like. This is what this transaction looks like.
All right.
So the $2 billion NGX right here is the sovereign wealth fund.
From
So
the Gulf states, UAE.
right, Abu Dhabi. And so they gave World Liberty Financial, this is the company that the Trumps and the Witkoffs started. They gave them $2 billion. The World Liberty Financial then bought US Treasuries at that value. They then underwrote, so that becomes the treasury of World Liberty Financial that they use to collateralize these stablecoins. They then issue this stablecoin, which is called USD1, to MGX. They issue them $2 billion worth of this stablecoin.
Wow.
Yes. Then
Oh, so they gave it back
MGX,
to them. Okay, interesting.
yes. So, but this also stays in the treasury. Keep in mind. So that becomes the circulating number of USD ones, which automatically makes it one of the largest stablecoins on the market. So it pulls out ahead in a lot of cases of a lot of other stablecoins. Then what MGX does with that 2 billion, they put it into Binance.
Mm.
Binance is the company where the founder was just pardoned by Trump.
For
Right?
money laundering.
Yeah. This money is being run on, so USD1 and the money that they put the company that they put this into, they run a protocol layer called BNB chain. Like Base is run by Coinbase. All of this is being circulated through Binance, right? And then who gets all of the transaction fees and all of the interest payments on top of the treasury? The Trump family, World Liberty Financial, and MGX.
Wow. It's a grift.
It's like a circular strategy, right? And this is exactly the same strategy that we're seeing right now in the AI company.
Well, Dimitri just said, yeah, it's high tech money laundering. Basically, if you want to,
Yeah.
if that's what it is, you just saw a high tech money laundering scheme where all that money gets circulated internally, but it seems like through external forces, and they just make the profit. And
Mhm.
Binance folks, for those 1,000 people who are joining us right now, they're like, okay, well, I'm following you. All right, UAE sets this up, gives $2 billion to the Witkoffs and the Trumps. The Trumps then create their own thing, and then because their daddy is the president, they get it back with the U.S. Treasury, and they get the pro-crypto legislation, and then they go to Binance. But don't worry, it's Binance. It's not their companies. Oh, but guess what? On the back end, it's all of them anyway, and they're getting the money. And Binance, the co-founder of Binance, now bringing him back full circle. Yesterday, Donald Trump, he goes, huh? Who? What? They told me just to pardon the CZ. CZ, the co-founder of Binance, was in jail and was going to spend several years in jail for money laundering. Why would they want to pardon this bad man who was money laundering, and not just money laundering, also money laundering for sex trafficking, drug trafficking, and terrorism?
Right.
Why?
Well,
Why? Yeah, but why
because
pardon
that's
such a
what
bad
the
man?
Binance chain was enabling. They enabled payments from terrorist groups, from arms dealers, from sex trafficking operations, from money launderers, all kinds of stuff. And this is again, when you get a very lightly regulated speculative market with a lot of money sloshing around, you're going to get that kind of stuff. So this is why Binance was targeted for the international sanctions, and also for the founder, Changpeng Zhou, who is CZ, again, going to pleading guilty to and then actually going to jail for money laundering and fraud.
And what do the Trumps gain by pardoning him?
Well, he goes back to being at the helm of the company that is providing the rails for their financial infrastructure empire. And he then also owes Daddy Trump a big old favor.
So our inside guy who now owes us for life is back at Binance, at the helm of the financial infrastructure for our money laundering scheme that has gained us $5 billion worth of money in the past 10 months.
Yes, and keep in mind too, when the meme coins were launched, they were launched on a different protocol layer, Solana. But what they've done with those now, and this because this was before World Liberty Financial and the MGX deal, the deal with Abu Dhabi. So they have taken the company that manages the income from those meme coins and they have tied it to World Liberty. So they've basically taken all of these different speculative vehicles and they've tied them together in World Liberty, which is all run on the rails of Binance.
But to me, this is what, well, in addition to the eye rule and grift, I'm really worried, and I'm a simple English major, folks. So if you're confused, can you imagine me? And my brain is small, but I've been following Cy, so I hope she's done her best because I know this is really confusing. But Cy, you've done a fantastic job breaking this down. I really appreciate it. But to me, this seems like so much speculation, so much fraud, so much Ponzi scheme. It's only a matter of time when this collapses, Cy. And you tell me, and if this collapses and now so much actual money is tied into this, and so many institutions now are tied into this because they're trying to make it legitimate and trying to make as much profit as possible off it, how does it collapse and what happens when this collapses?
Oh boy. Okay. So we haven't even got into the treasuries and the basis trades yet. And let me see if I can explain this in a way that just isn't going to even break my own brain. So, what has recently happened? Well, okay, let me back up one step. So, because the Genius Act mandated that stablecoins have to be denominated and pegged to an actual asset that is denominated in the underlying underwriting currency, fiat currency. That meant
Like
that
a dollar, euro.
most people don't hold it in cash, though. Most people will hold it in United States Treasuries,
Yep.
specifically ones that come to maturation very quickly, right? So that meant that there was a new market for United States Treasuries, especially quick maturing United States Treasuries. That means, like, when we're looking at the last year or two, we're seeing a giant market for US debt going into these stablecoin issuers. That is on top of who is buying US debt now that most central banks don't want to hold US debt, which is hedge funds. The,
Jesus.
the Fed released a report that did not get a lot of press on October 15th, where they found that it had been underreported which entities own U.S. Treasuries. The largest foreign holder of U.S. Treasuries now are hedge funds in the Cayman Islands. $2 trillion. Just let that sink in.
Wow. Wow. And what
And
happened? So, continue.
the VCs, A16Z, just came out with their new report on the state of the crypto industries, and they say they don't cover the hedge fund piece, but they say that, oh, isn't it great that we've got a new market for US debt now that other countries don't want to hold it anymore? Isn't this great? The problem is everybody's buying the same treasury bonds. They're buying these short maturation treasury bonds. And what are the hedge funds doing with them? They are leverage trading with them.
Oh, what could go wrong? So it's basically, I mean, am I out of pocket to say it would make the 2008 housing market bullshit, like, with all the collateral debt? Remember that the terms I'm forgetting around, like all the bullshit that they use to sell and package shitty mortgages as AAA mortgages, even though they were triple B, right? And they made quick money off it, and everyone else made quick money off it, but then it all collapsed because people realized it was all shit. And then once it collapsed, it brought down the friggin' U.S. economy, and the housing market crashed, and it was the worst recession since the Great Depression. What will happen if people figure out that this is all bullshit and all collapses?
Well, we're already starting to see cracks. It could be worse than '08, '07, '08, I would say. Because there's not just this one dynamic going on, right? We have like a lot of other dynamics going on at the same time. We have like erratic foreign policy, tariffs. We have rampant militarization that's costing a lot of money. We have, inflation. We have like all these other like critical systemic instabilities. But this is something that wasn't even uncovered until October 15th. We didn't even know that we had $2 trillion that were sitting in leverage trades that, for those of you who don't necessarily know what a basis trade is, so let's say you have a really stable commodity like a US government bond, a treasury bond, and you hold it for a specific period of time where you know that like, okay, it's going to be worth a little bit more when I resell this. So I'm going to resell this at a slightly higher price and I'm going to just get a little penny for myself, right? Again, this is a little like a tiny little arbitrage opportunity. Well, there's not much money in that, right? So why are these hedge funds wanting to do this? Well, what they're doing I'm sorry, I can't help but laugh because it's just like awful. What they're doing is they are borrowing money from banks, big banks, who can't gamble like this anymore. And they are using that to 50 to 100 times leverage that trade. So what happens, and this is a lot of what happened in the '08 crisis, is if there's even a small fluctuation in the value of those bonds, which is what is happening as a part of the macro instability that Trump is causing, then it could create a cascade of sell-offs, right? Margin calls, if we remember that movie.
Yep,
That's
yep,
a,
yep, yep.
right? And so these trades, these positions will be liquidated in some cases automatically because that's what happens with stable coins. So again, which are also these stable coins are being underwritten by these same vehicles that are being leveraged by the hedge funds.
It's the house. It's the Jenga, folks. It's the
It's
Jenga.
the Jenga,
Everything
right?
falls. But what falls is actually tangible. So based
Right.
on this bullshit, what falls is a house of actual brick and mortar on our heads. And the people who are the people who then make out like bandits.
Well, in this scenario, like again, I think that the banks just assume the banks are tied to this because they are lending this money, right? In order for these things to be done. They're also doing it through something called the shadow banking industry, which is showing cracks too. So we saw, Jamie Dimon come up and say, well, about there are two companies that recently failed, one through fraud, one through we don't know yet. And he said, "Oh, well, you see two cockroaches, they're probably going to be more, meaning there's some stuff going on and we need to be prepared." So those things again were attached to the subprime lending market, but this time in auto loans, right?
There you
And
go.
but how are these people funding their company, their billion-dollar companies? Well, they borrowed bank money in order to do it, right? Just like the hedge funds are borrowing bank money to leverage these basis trades on treasuries in the Cayman Islands. Just like stablecoin issuers are buying treasuries in order to back their stablecoins that they're issuing. So this is what, when we talk about like mixing of risk and cross contamination, this is what we need. And this is what all of those VC narratives lead out is they're like, oh, look, we got adoption. It's so great. Stable coins, like they're growing independent of speculation. That means product market fit. It also means total cross contamination with the centralized banking industry, similar to like the treasury, the money market with the centralized banking industry. So all
And
this
I think
stuff is just like,
folks, what's going to happen is you've already seen it happen twice already. Is right before the trade war, right? Donald Trump and the stock market crashed, but some people made money. And Donald Trump was in the White House, said, "Look at Charles Schwab, he made money, and look at them, they made money." It seems like there's a lot of insider tips in trading. If you've noticed, a lot of Trump and his friends right before the sellout, they just get massive money. So when the price is high, they sell, and then when it crashes, we're effed.
but even
So
those little things like that, like, yes, there are people who are individually making a lot of money on this instability, but the system as a whole is probably not going to be able to sustain that. And what these people, I think, probably are banking on is that, well, they've been bailed out every other time before.
So that I was going to get to that, and I have to actually go catch a flight, but I have 5 more minutes. So, but speaking about that, my concern was always uh, they're going to turn around and ask for the big crypto bailout.
Yeah, or I mean, this is going to hit the banks too. The banks are the ones holding the balance sheets. Again, it's just that they're not on the books, right? This is like Enron, when Enron moved things off of their books that were bad debts so that we couldn't, the regulators couldn't see it. The banks have done it again, but they've moved it all into private equity and, to some extent, I'm sure in, stablecoin issuers and into hedge funds. And so, who are again gambling at crazy risk with underlying assets that are our debt as a country.
And
So,
so
this,
we, folks, all of us, based on what's going to happen, it's going to happen because this is going to crash. I hope it doesn't, but it's going to happen.
I hope it doesn't too, but it just feels too inevitable. Like if you look at the repo market, which is like the wholesale money market, we're seeing the Fed have to inject money into this market because what's happening is that banks don't have enough capital liquidity to be able to meet their obligations on transactions going in and out of the bank overnight. And so again, this is what happens when like if a stablecoin like depegs, right? You don't have it, there's too many outflows and you don't have enough liquidity to maintain the value of that dollar to dollar ratio, right? So the same thing can happen with a stable coin, where if all this stuff starts going crashing to the ground, people start pulling their money out of USDC, USD1, USDT, and they don't have enough liquidity because the Genius Act only mandates you have a 2% buffer, then it depegs and your money's gone.
And it collapse. It'll be like a Jenga, man. It'll be like dominoes. And then they're going to bail out these a-holes.
If
And
we even
we,
have any money left.
yeah, and then our taxpayer dollars are going to have to bail out the grifters, even though none of us got any money from the crypto, if we have money left. And meanwhile, folks, to make it even more insidious, this is the end game of Elon Musk and Peter Thiel, who want crypto to replace the currency, and they want the economy to falter because they want everything decentralized so they can set up the techno-fascist utopia, right?
Yeah, but that'll never work.
What they're still going to try. They still think they're going to live on Mars. That'll never work. But it's not going to keep these psychopaths from trying. Folks, I could always talk to Cy for much longer, but I really have to go catch a flight.
Be
For those
safe.
who joined us late, long story short, we have 1,200 people watching. I know it's a lot. It's a lot even for Cy. It's a lot for me. But for those who joined us late, for the first 15 minutes or so, she goes through blockchains, crypto, what it is. And if you don't know what it is and you're still confused by it, don't worry. Throughout the conversation, I am the resident moron who asks the 8-year-old questions. I'm like, explain to me. My brain's small. And Cy then does a great job. And then we talked about why, oh why, Donald Trump and his family have gone into this business, and how essentially, can you show that chart you showed
Yeah.
one more time?
So one more
The
time,
money laundering scheme. Here you go, the money laundering scheme. I'm just going to call
this
it for
is
what it is. The money laundering scheme that allows Donald Trump and Tweedledee and Tweedledum and their Broligarchy friends to basically make tons of money based off of mass speculation and Ponzi schemes that, God forbid, if it collapses, we are effed. And everyone is wondering, everyone is thinking that this might actually happen, folks, the great crypto crash, because, of course, we live in hell. Inshallah, it doesn't happen. But can you tell them one last time, but before we leave, on October 15th, the news that we just found out?
Yeah, on October 15th, the US Fed released a report, you can go read it on their website, which said that there were a bunch of treasuries that they did not know were being held by hedge funds that are headquartered in the Cayman Islands, and that this is actually, instead of being something like $400 to $600 billion worth of treasuries, this is $2 trillion worth of treasuries, and that these hedge funds are using them in order to gamble with bank loaned leveraged money on the value of those treasuries. So this is an incredibly dangerous thing. They are looking into it, but we don't know if they're going to be able to. They're set to make, adjustments, Fed adjustments on the 28th of October, but let's hope they get there before this whole thing comes tumbling down.
I mean, what was the last? I mean, 2008, was it really that bad? Oh, yes, it was. It was. I lived through it. Cy, you lived through it. It was
I did.
terrible. And this one proves to be much
I was
worse.
eating an Egg McMuffin in the parking lot of the McDonald's on Tillery Street in downtown Brooklyn when I heard the news that Bear Stearns had collapsed. And I was like, this can be bad. It's like seared into my memory.
And it was bad. We
It
lived
was
through it,
really
folks.
bad.
Uh, we never learned. Cy Canterel, you are awesome. Please come back anytime. As I literally have to run for my Uber in 5 minutes to get to the airport, can you shamelessly promote yourself?
I write at Abstract Machines here on Substack. I'm also on TikTok at the same name, but please do follow me on Substack because I'm trying to get off of TikTok. I also have a YouTube channel at the same name.
And folks, as I'm waiting in the airport, I will try to post this. A lot of people are like, please post this as soon as we can so we can share it and see all of it. And this will also be on Size Substack, hopefully in about 30 minutes. Folks, it's the left hook. Everything's free. I'm a terrible capitalist. If you have a few dollars, give it to Cy. If you have a few dollars left over, give it to me. As you know, I got 800 kids, 3 cats. Let me feed one kid and one cat. But take care of yourself, folks. I've been saying it for a while. Take care of yourself. I know people laughed at me, Cy. 10 months ago, I said to folks, save your money. I said, if you have some property, keep it. And people are like, "Why you're talking crazy?" I'm like, you don't understand. I know these people. I've been following them for 10 years. Save up money, take care of yourself, take care of your health. I told some people, if your wife or your spouse has a passport, maybe, I don't know, just be safe. And I said he's not going to leave. And you just saw that Steve Bannon yesterday said we have a 2028 plan. And then we talked about crypto and we said, folks, follow this crypto grift. Voila, the Genius Act, deregulation, $2 billion from UAE. Trump is now worth $5 billion. How could they all of a sudden be worth $5 billion? What? Huh? This meme coin shit. It's all there in front of you, folks. I don't know what more do you need to see. And apparently, someone in the comments said some breaking news that Hakeem Jeffries on October 24th has finally endorsed Zoran Mamdani. So these are the leaders that we have that it took this long. The day is October 24th for Jeffries to finally endorse the man who won the Democratic primary for to be mayor of New York.
Late to the party.
Late to the party, folks. It's a long walk. Take care of yourselves. Be kind. Cy, thanks so much.
Thank you, Waj. I'll talk to
Bye.
you
Bye,
soon.
everyone.
Bye.